Good evening, as the case may be. Welcome to the ISTAT Learning Lab. Today we're going to talk about appraisers' outlook and expectations for 2022. And to do that, we have Lindsey Webster. She's Vice President of Asset Valuations for MBA, and Oliver Stuart Menteith, his Managing Director, FinTech Aviation Services. Lindsey leads a team of ISTAT certified appraisers and candidates in preparing aircraft, helicopter, spare parts, and engine appraisals, performing market research and analysis, modeling value trends, and determining future values and economic lives of aircraft. She's an ISTAT certified appraiser and frequent speaker at industry events, including ISTAT. She began her career in ground operations with Air Wisconsin, and she also worked in credit derivatives at Lehman and in sales with Ritz-Carlton. She received a Bachelor of Science in Finance and Insurance from Northeastern University in Boston. And Oliver Stuart Menteith started off as a mechanic and engineer for Danair, Cathay Pacific, and Marshall Aerospace, where he was performing and certifying C&D checks and line maintenance on aircraft, such as the 707, the 727, the 737, the 747, and also the BAE 146 and A320. In '95, Oliver obtained a master's degree in air transport management from Cranfield University. He went on to join Avmark as a senior analyst in their London office, where he was responsible for completing appraisals and other airline-related fleet planning projects. In '98, Oliver joined Aircraft Leasing and Management, ALM, as a technical manager, where he was primarily responsible for managing their portfolio of aircraft, which involved negotiating and managing leases and fleet planning. So before I hand over to Oliver to start with, I just wanted to remind you that at 10 o'clock New York time, 1500 hours Dublin time, Dean Gerber, the president of ISTAT, will give you a little bit of a wrap up for 2021 and talk a little bit about the plans and the projects for 2022 as it comes to ISTAT. So with that, I want to hand over to Oliver Stuart Menteith. Over to you.
Thanks, Niels, very much for the introduction. Good morning, afternoon, evening to all where you may be around the world, and welcome to another ISTAT lab. Today, we're going to just present to you some thoughts which we hope you'll find of interest. Stu and Olga on the last session focused more on aircraft values for specific aircraft types. But during this session, Lindsey and myself are going to be focusing on different subject areas. I shall be covering more of the supply and demand side of the equation and looking at the external circumstances that we're currently living with concerning the impact by COVID, whereas Lindsey will focus more on the residual value and part out scenarios that are currently playing out in the marketplace. So with that, if we just press on with my presentation. I think the no. Lindsey, I'm not sure. Can you actually see my screen?
Yeah, I can see it. I can see the full screen of your presentation.
Yeah. Okay.
Oliver, can I just butt in and say one thing?
Sure.
I forgot to mention, of course, as usual, you can post questions by clicking on the Q&A button and write in your questions. And then Jen Su, who is also here with us today in the studio, she will go over those questions, and maybe there will be some other questions from the rest of us. So you're welcome to post those questions as the presentation. So sorry about that. Thank you.
That's okay. And yeah, Lindsey, can you confirm you can see page 2 now?
No, we're still on your title slide.
Yeah, okay.
Yeah.
Okay.
If you hit the arrow over button, that should move on to the next slide.
Yeah.
There you go. Yep. Now we're on slide 2.
Okay. Right. Apologies for that. I'm more used to driving aeroplanes than presentations. So I think that the expression that Edgar Fielder first came up with in the 1960s, that if you have to forecast, then forecast often, is a very apt statement in today's market. It is increasingly difficult to forecast with any certainty what is going to happen within the next 6 months, let alone try and plot a trend line for the next 5 years. The 2 graphs there that you can see obviously are depicting both international and domestic RPKs, revenue passenger kilometers, which is essentially a metric of the number of passengers flying multiplied by their total distance. And it essentially just gives a health check as to the situation within the industry. And typically, as we see in 2018, the RPK split was in the region of sort of say 60-40 split between international and domestic RPKs. But if we look at the latest data published by IATA, we can see that for the domestic RPKs, we are still approximately 25% down compared to 2019 levels. The only bright spot there is domestically within Russia, but when you account for the fact that it only is it accounts for 3% of worldwide RPKs, the market is absolutely tiny and fairly meaningless. So on the whole, domestic RPKs are measuring between sort of -80% for Australia, which has obviously experienced very severe restrictions internally, up to, as I say, +24% for Russia. But on the whole, it's a fairly, still a fairly negative market. And this is some 18 months into the pandemic. Of course, one of the biggest drivers there is China. And we'll talk a bit more about that on the next slide, but that has a huge impact on how the domestic RPKs vary month by month. Looking at the international RPKs, the industry has fared less well there. We're still approximately sort of 65% down compared to 2019 levels. The biggest worry there, I think, is the Asia Pacific region, where we are still at least 90% down on RPK levels. And that measurement has hardly changed since the lows that we experienced back in March 2020, where international traffic was basically ground to a halt. Again, we see, throughout Europe and North America, RPK levels still down around sort of 55%. Both the major OEMs, Airbus and Boeing, have attempted to sort of predict what is likely going to happen in their latest forecasts. Airbus, their last forecast, I believe, that Airbus predicted that traffic levels would return back to 2019 levels between 23 and 25. Well, given that next month will be just 12 short months away from 2023, I would probably suggest that Airbus are scratching their heads over that one and are probably re-evaluating their forecasts. Boeing decided to abstain from actually providing a forecast as to when we are going to return back to 2019 levels, and instead talked about the GDP trend returning back to 2019 levels by the mid-decade. But I think herein lies a fundamental problem because essentially the relationship between GDP and traffic growth, especially for international traffic, is essentially broken. GDP levels for the last quarter published by The Economist show some countries growing very strongly, 8%. And yet this isn't simply reflected in the traffic growth that we see at the moment. And perhaps the next slide will help us understand why. So the recovery that is being powered by vaccines, but it's being regulated by disparate governments who have obviously never faced such a problem before. The policies worldwide are different. The testing requirements are different, and it essentially leads to a dysfunctional air transport system where airlines are not able to plan with any reliability. We see that in China, for example, the policy of trying to eliminate the virus by complete and utter lockdown across many cities, even if only 2 or 3 cases are discovered, is having a dramatic effect on the economic status of China. We're beginning to see a slowdown in that country financially, whereas other countries are attempting to manage essentially what they have at the moment. So the way that countries manage this whole process will have a dramatic effect on how quickly international traffic is going to recover. As an example, here within Europe, we have the World Health Organization has approved certain vaccines as being perfectly safe, and yet some of those vaccines are not actually recognized by the EU passport scheme, and so they're thereby excluding some vaccine, some people who've been vaccinated with vaccines that aren't fully recognized. Looking to the future, we could well see some airlines actually introducing their own policies in order to limit their own liability, in order to improve passenger confidence for their fellow passengers. So being double vaccinated or having a vaccine within so many months may not become part of future travel requirements. Indeed, the passengers may also be very anxious about the quality of healthcare systems in place at their final destinations, what insurance is available to them for their travel. And I don't think it's currently possible actually to be insured against COVID-related travel illnesses, at least not at the policies that I've seen. And also the subject of vaccine inequality will also cause some potential passengers to actually change plans or not to travel as frequently to some countries which simply aren't as well covered. So essentially what we ideally would like is a consistent travel policy worldwide in order to ensure really a sustained recovery in the market. The graph on the right I thought was actually quite interesting. It's being collated by researchers at Oxford, and it actually shows the percentage of unvaccinated people who today would actually elect to go and get a vaccine. And it sort of tends to vary between sort of 20 to sort of 15%. So I think ultimately we can actually expect the population of these countries, which are well-educated countries, to actually not be vaccinated, and that could cause problems in the future if we're not able to accommodate people who are not vaccinated. So Zach, I think it would be a good time to now run the first polling question, if you could, please.
Couple moments and I will share the results.
Thank you.
Looks like we've got a consensus here.
Do you agree with that, Oliver?
Yeah, it's funny that I can't even see the results.
Oh. So the majority of people said between 2023 and 2025, so 69% of attendees. So that's
Okay.
return, followed by between 2025 and 2027. After 2027 was 9%, and nobody said never. So
Very interesting. Okay.
I think, Oliver, one of the interesting things about that polling question is with, to return to 2019 RPKs, is that necessary in your opinion for market values to return back to base? Because if we think about pre-pandemic, especially on the narrow body side, the majority of those aircraft were just hovering above base. Obviously not in all cases, but does 2019, is that really the magic number from a values perspective?
Oh, correct. It isn't. It's a base. It's a reference number, which the industry would like to obviously try and climb back up to, because it essentially defines the fleet composition worldwide, irrespective of what the values are. But I agree with you that in order to get back up to base values for some aircraft, we don't necessarily have to climb back up to 2019 RPK levels.
Yeah.
Having said that, it obviously depends on a case-by-case basis with respect to specific aircraft types. Given that, throughout this pandemic, we're still actually producing new technology aircraft, which is displacing older, perhaps older COs or NGs at that point. So I think that the value sort of landscape as it is sort of further complicated by the fact that we will see, I think, step changes in values as we go through this pandemic.
Yeah, I agree.
Okay, so I should be on page number 5 now. Is that correct, Lindsey?
No, you're still on the vaccine page.
Okay. Is that page 5 now?
No, not.
Yeah, apologies for this.
Lindsey, could you pull up the presentation and share your screen? Is that?
I can do that. Oliver, do you want me to do that for you?
Yep. By all means. Thank you.
All right, can you see that?
Yeah, I can. Thank you very much.
Of course.
Much appreciated. So after that complete palaver, I think the best thing that we can talk about is alcoholic consumption. So in the UK, there's a rather popular pub chain called Wetherspoons, and they've just released their last quarterly results. And what it showed was that they had experienced a substantial reduction actually in the consumption of ales and stouts, which are typically consumed by people over the age of 55. It's the typical male who's sitting alone, sort of staring into the amber liquid, wondering about what ifs. But I think that it's probably a terrible proxy, but I do wonder whether there is going to be sort of a change in the propensity of over 55s to travel. The idea of essentially mixing with people in a pub within a confined area may also sort of translate across into sort of perhaps mixing with people on an aircraft in a confined area for long periods of time if you're going to be traveling internationally. As I say, maybe a terrible proxy, but it's probably worthwhile noting that as we can see there from the traffic snapshot at Heathrow in 2018, the over 55s actually account for all 25% of traffic traveling through Heathrow during that year. So it's a pretty substantial portion. They're a high leisure user of the air transport market system. So it maybe will be something worthwhile keeping an eye out in case our sort of social trends towards travel actually change materially. One thing that we do expect to happen, and as we've seen already, is obviously the amount of business travel has reduced substantially. HSBC have already announced that they would be reducing the number of trips, staff trips by 70%. Bloomberg ran a survey recently showing that at least almost 85% of the 45 largest companies are going to reduce their staff travel budget. So there does seem to be sort of at least an acknowledgement that Zoom can actually, or Teams or what have you, can actually work. And in the future, we could actually see that this may lead to potentially a reconfiguration change of the aircraft, perhaps reducing business class accommodation and increasing premium economy seats, which are far higher yielding seats, and was already particularly popular pre-pandemic. We could also see potentially more taxes or fees associated with ESG being brought in. Obviously, during the pandemic, there's been quite a lot of focus on green energy, and it may well be the case that additional taxes or fees will be brought in potentially by lenders or indeed governments or indeed the airlines themselves. More recently, airports have also decided to increase their charges quite dramatically. Schiphol have announced, I think, at least a 40% increase in charges, Heathrow 90% in charges, in order just to recoup essentially a year's worth or 18 months worth of loss of traffic. And it's unlikely that they're going to dramatically reduce those in the future. And the other issue, of course, that is playing out and is becoming more and more prominent now is this step change in inflation rates, some of the likes of which the current generation won't have experienced before. And we wait to see whether it's actually going to potentially either, increase ticket prices or essentially force airlines to cut costs where they can even further. Okay, Lindsey, next slide. Thank you.
I was going to say one comment. I mean, I think it's interesting the business travel having such a significant reduction when that's such a large portion of aircraft revenue is coming from those travelers.
Yeah.
It does subsidize an economy class ticket. So if airlines are then forced to increase the price of the economy class tickets, does that not prolong the recovery of RPKs just due to the price restrictions on the rest of the passengers?
It could do. In fact, what we've actually seen is that the business class, the average business class ticket during the pandemic the price fell 3 times as quickly as economy class ticket prices. And we actually saw a movement from economy class into business class by some economy class passengers who would typically stay flying economy. Potentially, I think it's difficult to use RPKs really solely just as a metric to judge that. I mean, obviously the biggest factor here is yields, because if you're flying internationally, we know it's very difficult to make a profit flying internationally without a business class section. It really is the key to being able to make a profit on that route. So somehow or other, airlines are going to have a differentiation in yield between the different cabins.
Yeah, it'll be interesting to see.
So I thought that it would just be interesting to look back and see what the 2 biggest OEMs have been doing for the past 2 years, and actually they seem to have had quite different outlooks as to the type of market that they were delivering into. So we can see that essentially Airbus have sort of continued relatively unabated with aircraft deliveries, and throughout 2020 and 2021, up to the end of November, they delivered just over almost 1,000 passenger aircraft. Whereas with Boeing, they have delivered just almost 300 passenger aircraft, again, not including freighters. So Airbus basically during the first 2 years, or the last 2 years, it delivered sort of almost equivalent number of NEOs, and fairly evenly split between A350s and A330s. Boeing, on the other hand, obviously they've continued in 2020, they were still struggling with the MAX. And then in 2021, with the recertification of the aircraft, then started to deliver that. Conversely, with the sort of temporary cessation of the deliveries of the 787s, they delivered far more wide bodies in 2020 than they did sort of in 2021. But it is a huge difference between the 2 manufacturers. Airbus delivered more than 700 aircraft than Boeing, which I think it is absolutely staggering given the state of the market that both OEMs were delivering into, with aircraft being flown off the production line straight into storage, simply because the customer essentially could not sort of walk away effectively from the contract. So that is quite a stark, for me, it's a very stark chart indeed. But if you then look at see what has actually happened to the overall general levels of storage, it's probably no surprise that we actually see that, and if we just take sort of years 0 to 20, that essentially for the wide-bodied aircraft, Airbus have approximately 200 aircraft more in storage, than Boeing. And with the narrow bodied, it's in the region of 5 to 600 aircraft more in storage. And if we then just move on to the next slide, please, Lindsey. If we look at that, it's sort of in more detail. We can actually see that there are far more aircraft associated with the if we look at the wide body section more, we can actually see that throughout Asia and Europe, Airbus have essentially more aircraft in storage than Boeing. And if we look at the wide body storage sort of active ratio, where 50% represents sort of the same number of aircraft in operation as in storage, we can see that that metric is obviously well above 1 to 1. The dotted line there sort of represents 10%, representing sort of availability. And historically, anything sort of above 10% level really indicates a high level of softness in the relative aircraft values. So within the wide-bodied sector, the age categories from sort of 5 to 15 years are predominantly, or they're dominated by the aircraft that are still in storage with the Middle Eastern carriers, the A350s and the A330s account, and of course the A380s, a large proportion of which is still in storage, account for the majority of those aircraft. In the narrow body section, again, we can see Airbus still has a significant number of aircraft in storage compared to Boeing. But for the Boeing product, essentially for the storage active ratio, we can actually see that essentially Boeing is faring better. So we would expect those aircraft in those age ranges, Boeing aircraft, for the values to essentially be becoming firmer at a more sort of better, quicker rate than its equivalent Airbus product. Okay, thank you. Next slide, please. So the relationship, and Stuart and Olga touched on this the last time, between essentially base values and current market values is one that is obviously heavily dependent upon which aircraft types we're actually looking at. Typically, appraisers will keep base values relatively constant, and they're only essentially adjusted during step changes in the marketplace itself. And we are going to see step changes with respect to wide bodies and narrow bodies. Essentially, the older equipment that is being replaced by the newer equipment. But that step change will have been accelerated due to the pandemic, due to the large number of aircraft that have found themselves in storage. So the relationship between the BV and the current market values, and I'm talking about unencumbered values here, is complicated and will be tailored to each specific aircraft type. So we could expect a 10-year-old A330 300 for its market value to remain consistently below what was 2019 base values. We could expect 737 MAX to now start edging up towards the base value. We could expect perhaps newer 737 NGs that were potentially last off the line to be closer to their associated base values, but obviously for 10, 15-year-old NGs to be further away from base values. So the wide-bodied aircraft obviously have their own value characteristics, but I think that the problem that currently exists in the marketplace at the moment is that whereas we were more sort of heavily reliant on looking at financial metrics to determine how wide-body aircraft values were going to fare in the future, at the moment we are very heavily dependent on government policies. Within that chart, you can see what was called the wide-body danger area, where essentially the first aircraft would come off lease and then have to most likely be reconfigured and undergo an entry into service check and then released. All of that represents extremely high cost to a lessor. And it's absolutely fine if the aircraft is still in service at the moment, but if the aircraft is actually out of service, actually trying to justify pulling an aircraft out of storage, given where lease rates are at the moment and given what offers to purchase are at the moment, it's simply just not financially viable for lessors to do that. So I think that demand is going to have to increase substantially before we see lessors willingly invest into aircraft that have been in storage. I think it also goes to say that aircraft that have been in storage for 2 to 3 years, their chances of actually coming back out of storage obviously get less and less simply because the number of tasks required in order to reactivate the aircraft increase month after month. We can also see that within the wide-bodied sector, the average type of lease contract that is on offer may just be a power by the hour deal, or it may also be sort of a hybrid of an operating lease rate plus a PBH rate. Typically, the PBH rate would be used during periods of low demand, and the airline may then agree to go on to, say, a fixed lease rate, which would at least guarantee the lessor with some income. The part-out market remains obviously heavily depressed for the wide-bodied market, to the extent that many lessors are just simply not bothering to actually take any action on their aircraft. It's cheaper just to insure the aircraft and continue to pay the parking fees than actually attempt to part the aircraft out in what is a depressed market. And of course, neither Airbus or Boeing actually help the situation by continuing to deliver new equipment into a market that is already saturated with capacity for the limited amount of demand that currently exists. The narrow body market is obviously a bit more predictable. Domestic USA traffic levels are already practically back up to 2019 levels. The market segment as a whole is less reliant on international travel policy. So there is essentially sort of less risk associated with the narrow body sector. And also proportionally less expensive to take narrow bodies out of storage, given the reduction in lease rates that we've seen when you compare it to the reduction in lease rates that we've seen for wide bodies as well. So the relationship, I think, is relatively complicated, and each aircraft has to be assessed on a case-by-case basis, indeed even down to an MSN basis when you're looking at the part-out market, where questions arise of interchangeability between parts. That will determine how easily individual parts are able to be sold into the marketplace. And just a quick note on that, what I've experienced with some of the aircraft that we've been managing is that for those MROs that have tertiary or third tier MROs, so that actually repair and overhaul parts, for those that actually have a monopoly over their marketplace, their charging rates have not reduced. Of course, you know, they have lost business and they're keen to charge as much as they can. So if you have parts that need to be repaired and there is only one supplier who can actually repair those parts, then don't expect a discount. Conversely, you may well say, well, fine, I'll now go look at the actual, what the cost is going to be in the actual marketplace. Well, there are a lot of part out companies who are still holding 2019 stock, and they don't want to release those stock levels at 2021 levels. So there is disparity, I feel, in the marketplace with what the values of parts are on the market, because you can find some part out suppliers who are actually in more distress, who are willing to be more realistic. Anyhow, those are my thoughts. I think that's the last slide. Thank you, Lindsey. I shall turn it over to you. Thank you for managing all of that.
Yeah, of course. No, I thought it was really interesting. I think that like one of your points on the aircraft being stored for a certain amount of time, and kind of as it's been in storage longer and longer, the likelihood of it re-entering is might go down as well. And I think that's interesting because I know that some of the lessors that we've talked to are financiers that have A330s at this point would rather keep the aircraft in long-term storage than to what you had touched on, to take the lease rates that are in the marketplace right now. So maybe for some of the aircraft like the A330s, which do have the opportunity to bounce back, especially once Asia starts to open back up again, you know, maybe that's an aircraft that you start to kind of, it doesn't really follow maybe historical trends with that as far as the time in storage. Though imagine the A330 is going to be very expensive to take out of storage and reactivate into service. So maybe that does kind of impact the aircraft a little bit more than we might have expected.
Mm-hmm.
All right, I will move on to my presentation then. All right. Okay, so Oliver gave us a really great overview of the supply and the demand in the market and touched on part out values. So what I'm going to be going into is maybe a part of the market that people ended up in during the pandemic that they didn't really expect to end up in, which is the part outs. So looking at engine market values and then the airframe values themselves. And then going back to the whole aircraft, looking at our proprietary aircraft rankings, which are not based on market values, but actually based on the underlying data. So orders, deliveries, active park ratio, things like that, and how they've changed from 2019 to 2021. And then also looking at, from our perspective, the recovery. So which aircraft do we think are likely to see market values return to base, and which aircraft we kind of have on a residual value watch right now. So starting with probably the most valuable part of the part out in general is the engine values. So if we're kind of looking, this is focusing on the narrow body engine values. We saw that in 2020, 2021, we had a drop in utilization. The number of shop visits decreased significantly. Airlines were really relying on their green time engines and on their parked aircraft rather than tapping into the spare engine market. And that really did cause a bit of distress with the engine market values. And we saw them drop about 20 to 30%, depending on the type. Since then, though, we have started to see obviously an uptick in utilization with narrow bodies, especially in Europe and North America. And that has led to market values starting to return back towards base. They're not at base. And kind of based on the shop visit forecast that we've put together, We actually have a white paper online written by my colleague Garrick Rice that goes into more detail on the forecast if anybody is interested in getting a little bit more detail on it. But just looking at the shop visit forecast and our forecasted market values associated with those, we do actually expect the engine values, though they took a bigger hit in the aircraft themselves, we would expect them to return to base maybe even before the aircraft themselves, just as we start to see utilization pick up. So you'll see in 2023, 2024, those engine market values, they're not where they were in 2019, but in order to return to base, they don't need to be. Because pre-pandemic, we had market values well above base for narrow body engines, for several engines as well, where they were anywhere from 5 to 10% above base. So just to return to equilibrium, we don't need to get back to 2019. And we do think that returning back to base is a very realistic forecast to have for these engines and something that we think is more near term. So though on the passenger side, wide body engines also took a really significant hit as well. They, depending on the engine type, could have taken up to 60% of a market value impact during the pandemic. We haven't really seen the recovery there that we're seeing on the narrow body side for obvious reasons with international traffic that Oliver showed in his presentation. But there still is a bright spot in the engine market that I do think is important to point out because it's not all bad news in the engine world. And that is for engines that are on freighter aircraft. So you're seeing that with the Pratt 2000s and then also with the RB211s on the 75s. You have the CF6 ADC2s and then the Pratt 4000s, specifically the 4060 on the 76s, which have really had quite a value jump. And that's a combination of just the number of aircraft that have either been converted or there's been a large uptick in aircraft being taken from the desert and reactivated. So you're seeing that there's a limited supply of these engines in the market, a limited number of parts and green time. And that really is showcasing in both the halftime values, but you're also seeing an increase even in like the core values themselves. So the freight market is not just only the aircraft themselves, but also the engines that we're really seeing strong values in. And the freight market, I think people are a little hesitant about how long that actually stays successful and really at the current demand levels that it's at. From our standpoint, I think this is going to be, near term for these engine values to stay where they're at, though these engines are all in their sunset phase. And so they are, at risk of much more volatility than maybe an aircraft or engine like the narrow body CF 56s and the Vs. So, we're, I guess, optimistically or cautiously optimistic about these engine values in the midterm. So moving on to the airframe value. So there's a lot going on this slide. So I'm going to have to kind of walk through because I think that it can be misinterpreted. But starting on the right-hand side, where we're just looking at, this is specifically for the A320 family, and more specifically for the A319. If we just look at 2019 versus 2021 for the number of RFQs, the number of parts, what's actually happening in the market in the trading place, in the trading space, the number of RFQs have gone down by 23%, while the number of parts have actually gone up by 36%. So you're seeing a pretty significant imbalance of the supply and demand in the part out market with the A320 in particular, or the A320 family in particular, but it's also something that you're seeing across most aircraft types. So looking at the chart on the upper right-hand side, the part out values for the A319. So you have here the market value, and what this is what for a teardown company, the piece part out value for the parts that can be sold, because not every part of an aircraft is really sellable. So that's if you were able to sell every single part that is sellable in those years, what value would you get for it? And so this really kind of captures how much the prices fell in 2020 versus 2019, but then also showcases the recovery that we've already started to see in 2021. Now, the next one over is the gross sales projection over 5 years. And this is more of reality for a teardown company because you're unlikely to sell all of the aircraft in the first year sell all the parts in the first year that, in the first year that you tear down the aircraft. And so in reality, you're expecting to sell it really over a 5-year time span. So in 2019, when we were looking at our forecast, of course, we were not anticipating any sort of pandemic or downturn in the market so significant. So you saw that the gross sales projection over the course of 5 years was still relatively high. 2020, now you of course do have the impact of the market values in 2020, but we still expected there to be recovery in part out values across the board. And so that recovery is also included in those gross sales values, and same with 2021 as well. The last sort of, I guess, bar of charts or values there are for the airframe values. And that is for what a lessor or financier or the owner of the aircraft would actually be able to sell the airframe to a part out company for. So you can see it's a much lower value. The market values in the gross sales, that does not include any of the teardown costs, the maintenance costs, storage, anything like that. So, and of course, the part out companies still need to make a profit. So that's why the airframe value is so much lower. What you were getting in 2019 really was a reflection of a market that had very limited supply. There was a significant amount of demand for narrow body aircraft and not that many were going into part out. Versus in 2020 and 2021, a lot of people were looking towards the part out markets as opportunities to maybe move some of these aircraft off their books, or just an opportunity to bring revenue in by turning towards the part out market. The interesting thing that we saw though, is that despite the fact that there were obviously a number of A319s and A320s that were parked, and we did so many valuations of A319 part outs for pretty much every ABS and a number of other portfolios as well, where people were considering part out. In reality, you actually didn't see a huge influx in the number of aircraft being parted out. So that 36.5% increase, that is obviously significant, isn't what it might have been considering just the sheer number of aircraft that were parked. And I think that's best reflected in this next slide, where if we're looking at the part out values as a ratio to the overall aircraft value, maybe as a flyer, or really kind of what I'm kind of getting at here is more from a book value perspective. Can you actually capture that full value that you're looking for through part out alone? So in 2019, when there was limited supply, you have this is an 11-year-old aircraft, really an aircraft that's coming off of its first lease. If you can't find a place for it in the secondary market as a flyer, and you wanted to actually be able to part it out back in 2019, you actually could get the majority of your book value in the part out. And that was because you had, again, the engine market values were well above base. The airframe values were also trading pretty highly as well. And then the lease rates were, already starting to take a hit in 2019 pre-pandemic for some of these aircraft. When we now look towards 2021, the engine market values have taken a hit. The airframe values have taken a hit. And that overall part out value that you can get, not only for a part out company, but also just somebody that's selling the airframe as itself, has really diminished. And so somebody that's holding on to an aircraft like an A319 that might want to sell it into the market as a part out is really risking potentially having to take a value impairment on their books, just because of the additional value that they're going to have to essentially give up if they choose to go to the part out market. So this is one of the reasons why there has been, part out companies, even if they, if there's probably more aircraft they would love to buy at these really low values right now, especially if our forecasts are correct with assuming that the part out market will be coming back and these values will be increasing. But at the same time, you're seeing that some of the people that are actually selling the assets aren't willing to get them up at the prices that are kind of necessary for part out companies to make a profit these days.
Lindsey, if I can just interject at
Yeah.
that point, I guess just one comment I have is that these bar charts would look quite different if we were looking at a 319 that is, say, 20 years old.
Yeah.
So I think it's really interesting that the value that you can extract from each year of build of aircraft will change dramatically. Airbus have something on the 320 range that they call an enhanced 320, which there was sort of a step change in the components that we used, and the level of interchangeability across for pre and post enhanced versions dramatically sort of decreased. And part out suppliers are well aware of this, and in my discussions with them, as I'm sure you've had with them also, a lot of them would not even touch a 25-year-old A320, because simply put, if the majority of the fleet that are in service are a lot younger, then the chances of the components that are being removed off the older aircraft are just not going to be compatible with the newer technology. So I think that for those aircraft that are still in storage, which are 20 years of age, they will continue to stay in storage, because I just can't imagine the demand for parts, meaning that a significant number of those vintages will be removed and essentially broken up.
Yeah, no, I mean, that's a really great point too, is that, the A319 is compatible with the A320 and even the NEOs in some regards as well, but the part number that you actually have is going to be a big factor in the market value for it. So the part number that you have for, like you mentioned, like a 25-year-old aircraft isn't going to be able to get you the same market value from a company's perspective as a 10-year-old aircraft, because they are constantly upgrading the parts, right? And, a younger aircraft is going to have a larger part out value than an older aircraft will, for sure.
Yeah, fully agreed.
So I think I'm switching here. I have a polling question, which we'll put up shortly, that's just asking about aircraft rankings. We have, at MBA, we have aircraft rankings. This is not market value. This is if we're looking at the number of parked aircraft, availability, orders, backlogs, things like that, which aircraft had the ranking drop the most from 2019 to 2021?
A few more votes coming in now. About 3/4 of the audience, so I'll go ahead and share the results.
Okay. All right. Yeah, so that's really interesting. So the A380, 74% of you said probably had the largest drop in its ranking score, followed by the 777-200ER, and then the CRJ-1000 and the A319. So interestingly enough, the aircraft that had the biggest drop was actually the CRJ-1000, which surprised me too when I was looking at these aircraft rankings. But I'll back up a minute and kind of go over exactly what these rankings are, what's taken into account, and kind of why they're important to us. So we have rankings that we do it for every single aircraft that we value, and it's on a scale from 1 to 10. And each category is based off the body type. So narrow body, wide body, regional turboprop, and then narrow body and wide body freighter. And we have about 15 to 17 categories for each of those types, where we're looking at is just purely numbers. So there's really no appraiser bias in these rankings, because we're looking at, what is the average fleet age, the seating capacity, orders, deliveries, the availability. Really, the metrics that we've seen do have an impact on understanding of market acceptance, as well as really how that aircraft market is likely to perform in the near term. So looking at this, I guess I'll kind of start on the left here, where I was just looking at by manufacturer and then by body type, how the rankings changed from 2019 to 2021. So I will say, we do this semi-annually, and it's not unusual for an aircraft to have no change in the rankings, or the ranking might change by 0.1 or 0.2, but really it's not that typically drastic of a change. So to have sort of these, an entire point change in some of these rankings was pretty surprising for us from 2019 to 2021, though also completely explainable and understandable. I think one of the most interesting ones was the fact that the worst performer was Bombardier regional aircraft. And that's not something that you saw from the values. It was really just something you saw because the aircraft went out of production and they continued to age. You, of course, did have some increase in availability, and parked aircraft, they actually saw the biggest drop. And I think the biggest reason really was the aircraft going out of production. The winners in this category, surprising no one, I'm sure, are Boeing wide-body freighters. They had the biggest improvement. They also are 4 out of the top 5 ranking performers from 2019 to 2021, with the 767-300 freighter taking the cake there. Boeing narrowbody and Airbus narrowbody actually didn't do too poorly. Airbus does perform better than Boeing in this category, mainly driven by the A321neo, is actually our highest ranked commercial, passenger aircraft, with the 777 freighter being the highest ranked freighter aircraft. And then I think that in the top 5 performers, so one of the ones that might be a little bit surprising to people is the A220-300. But actually with a new, a newer delivery aircraft that's at the forefront of its production, it's actually pretty common for that to be one of the type of aircraft that would see more significant changes in the ranking. And that's just due to, it usually has a large backlog, and then the number of aircraft that are being delivered, and then the expansion of the operator base and the geographic distribution as well is increasing. And so the A220 benefited from that and saw what we typically would see for a new production aircraft. We would have seen this sort of, 0.6 increase in rank for aircraft like the A321neo and the 737 MAX as well. But those aircraft were dinged by their number of parked aircraft, both temporarily and long-term storage, as well as the availability. Both the MAX and the neo families both saw an uptick in availability, which the A220 was insulated from. And that's really reflected in the values too, because the A220-300 is one of the only passenger aircraft where we actually saw market values stay pretty close to base the entire pandemic. Some surprises for me, and I'm assuming for people in the audience as well, are some of the bottom ranking performers. So A380, no real surprise there. The Q400, that has the Flybe bankruptcy that's still impacting the rankings on those aircraft and the values as well. But the CRJ900, that's an aircraft that the values for it actually have been relatively stable. And it really just has been dinged because of the fact that it's been out of production. You do have a few fewer operators than we did in 2019. And I think it's really a testament to the insulation of the narrow body market, really propping up the scope clause regional fleet. The fact that even though the ranking has actually decreased, our market values actually really aren't that far off from base. And that is an aircraft that we do expect market values to completely return back to base. Oliver, did you have any comments on this? Does this make sense, I guess?
Yeah, no, it makes sense. As you say, I'm slightly surprised about the CRJ 900.
Yeah.
I realize for an aircraft going out of operation, that it lends itself to perhaps the investors becoming a bit more nervous about investing into an aircraft, or even an operator acquiring a fleet of aircraft, the support of which may not be as good as previously provided. But within the marketplace itself, it still does an excellent job domestically within the USA. And throughout the pandemic, compared to other aircraft types, relatively few of them were retired, and a lot of them have returned back out of storage.
Yeah.
So I am slightly surprised by that.
Yeah, no, that was definitely startling to see for sure. So my last slide is looking at kind of a matrix of where we expect certain aircraft to fall, or is the likelihood of recovery, as well as the time for recovery as well. And they kind of fall into 4 different categories of residual value risk. So you have low, medium, high, and then very high. So anything that's below the dotted line, those are aircraft that have essentially either were fallen out of favor before the pandemic, and that was just further cemented during the pandemic, or the values have fallen to such a significant extent that the ability to recover back to what would have been base value has in a way become unachievable. Anything that is above the dotted line are aircraft that we would have expected to see market values bounce back for. But you'll see that aircraft like the A330-300 and the 777-300ER, those have, you know, shifted over into sort of that medium residual value risk, sort of medium high really residual value risk, because the time for the aircraft to recover could be so long that it you know, they run out of runway essentially to see market values return back to base. So you have some aircraft where, you know, with the Q400, we expect that aircraft to return back to base, same with the ATR 72-600, but still recognize that the Q400 does have a little bit longer to return, not because that specific market, the market that it operates in is going to be more challenged than the ATR, but just due to the sheer number of aircraft, just moving those into placements. Though I know that those have been moving. I think the restarting of Flybe takes a lot of those aircraft out of the secondary market, which should aid with the return for market values back to base. And then we don't expect any sort of residual value impacts to aircraft like the NEOs, the MAXes, 787s, A350s, the new gen aircraft. And then you have aircraft where the chances of the aircraft returning to base are just so unlikely that we will be bringing our base values down. And that's on aircraft like the 777-200ER and the A380. So, you know, obviously there are a lot of different factors that could change all of this. Any sort of prolonged or maybe an expedited return of passenger traffic could move these aircraft into very different regions of the matrix. But this is kind of how we're looking at the aircraft when we're thinking about residual values and which aircraft we have on watch. Any that you disagree with, Oliver?
No, not really. I was just looking at the 319 and looking at the relatively slow sales of the 319 Neo. I wonder if the opportunities for that aircraft are, you know, going to be enhanced in the future if we see sort of, you know, a return back to normal domestic RPKs, whether demand will absorb, you know, surplus A319 CO classics. To the extent where, you know, we do see market values climb back up to base values in that respect. Yeah, with the A319, I think that one's an interesting one. You know, there haven't been that many orders for the A319 Neo, but a lot of that is because the operators that might have the A319 right now are also ordering the A320 Neo as a replacement for that aircraft. And with Airbus increasing the production of the A320 Neo family, as each kind of like year passes that the market is down, and those, as you mentioned before, like with the A320s coming into service, I think it really diminishes the chances for the A319 to see full value recovery. Even if it obviously does have chance to get higher values than it is now, it might not get back up to where it was in the mid 10s. Yeah. It'll be interesting to watch. Yeah. So that concludes our planned slide presentation. And then I believe Nils and Jan have questions from the audience.
Yeah, we'll start off with Jan's questions.
Mm-hmm. Yeah, so from the audience, we have several questions. So first of all, it's more of a logistic question. Will those slides be shared after this Zoom call? And Stuart, Oliver, would you mind to share this slides with the audience afterwards? Yeah, absolutely no problem. Probably because nobody saw them. It was presented very well. So okay, so I think like probably after this call, the video will be posted on ISTAT website, and both presentation will be uploaded as a PDF link to the website, so the audience can go to the website to download it. And then the next question I think is on Oliver's presentation. I think you mentioned there was a reduction in business travel. So like with the reduction in staff business travel budgets, is it more of a function of intercompany travel reduction or actual going to see customer reduction in travel?
Yeah, so but what the industry is saying is essentially that they will be reducing the number of internal staff movements where you're going to go and see customers for face-to-face meetings. They still expect the sort of numbers that were achieved, say in 2019, to be achieved once again over a period of time. But initially, companies are thinking, yes, they will reduce. I mean, if they haven't been doing so well financially, then they'll want to make use of technology to reduce, obviously, the expenditure internally within the company. But they will prioritize face-to-face meetings for sure. So it's going to be a mixture. It's not just going to be a straight cut across the travel budgets. No, you can't travel. It will certainly sort of be prioritized.
Mm-hmm. Yeah. So our next question, I think it's probably for Lindsey. When on your first few slides, you show some engine values. So our audience is curious to know, like, where can they get the engine value data, or are there any white papers they can look or look up online, or somewhere they can access some white paper to educate themselves on engine values?
Or yeah, I mean, so it's just on our website at mba.aero. I can see if I can also provide it to ISTAT, the white paper on the CFM forecast that was mentioned in my presentation, and see if that can also be uploaded.
Yeah, that would be great, I think. And then the next question, I think one of the audience asked about like CFM 56 values, but I think Lindsey, you probably already showed that in one of your chart on your presentation. So I think our audience can just go to download your presentation later on to find the CFM 56 values later. And then the next question we have is about residual value forecast. Have you considered factors about SAF, I think that's sustainable aviation fuel, adjustability towards the next decades?
Well, so I mean, SAF is something that the engine manufacturers are currently working on now to make sure that they are applicable on the current generation aircraft. So it should be able to be used on 737-800s and A330s, you know, different engines. So it shouldn't, that SAF itself shouldn't have any sort of significant impact that I'm aware of on the residual values of aircraft, because it should be compatible from what I've understood.
Yeah, I'm not really able to sort of comment further on what Lindsey has said, but you know, whatever sort of changes in processes with providing fuel to aircraft that is incorporated, it's going to have to be done in a cost-efficient manner, and assuming that it's applied across sort of the commercial fleets itself, then really we shouldn't see any sort of material change in residual values. You know, if an aircraft type is not able to comply with the latest fuel standards, then we could well see an impact in those residual values.
I had a couple of questions. The first one is for Oliver, and that is that you talked about inflation between 5.5% and 6.4%, I think it was. How would that affect the future value forecasts? I mean, you know, typically we use 2.5% now when we look at this. Should we use a higher percentage now for forecasting?
Well, I think the question, well, the jury is out, Niels, on whether we're going to see sustainable inflation carrying on, say, 10 years hence, or whether the inflation has been essentially brought about by the issues that we've seen in logistics over the past 18 months. I think that's essentially the big question. Historically, with inflation rates, sustained inflation rates, yes, we would typically use a higher inflation rate. It's a difficult question to answer, I think, with any certainty at the moment. And investors may want to sort of take a hybrid of a number of different scenarios, because we may well see, for example, in the next 18 months, we may well peak inflation and then come back to something more sustainable in perhaps the 3 to 4% area. So it may well be advisable for investors to sort of model future investments on a number of inflation cases.
Okay, and then a question for Lindsey. You talked about engine values, and I was wondering, during the pandemic, has there been fewer engine overhauls, or have the airlines used this time now when the airplanes were sitting on the ground to actually do engine overhauls? And would that affect engine values going forward, in the sense that if there is a scarcity of overhauled engines, it may actually increase values for engines that have been overhauled and vice versa?
Yeah. So, I mean, there were definitely overhauls that were taking place during the pandemic. We see that just in the aircraft data, as well as just discussions we've also had in the market. So for sure, airlines are definitely taking advantage of the park status to go through overhauls. Though there has still been a reduction in the number of shop visits and overhauls just due to some cash flow constraints, I think, with some of the airlines. And yeah, I think there is definitely an opportunity for there to be, depending on how quickly demand returns and passengers return back to the skies, there is an opportunity for there to potentially be maybe a relatively quick upswing in engine values for some of these overhauled green time engines. I think you already kind of saw that a little bit with the V2500s, just if you had the AD completed that was issued earlier in 2021, you already did see a pretty big spike in engine values coming back up for those completed AD engines.
And then I was intrigued by the MBA score ranking for aircraft. Now, how do those score rankings correlate with the percentage of a type in storage, and how do they correlate with drops in values during the pandemic?
Yeah, so I mean, so storage is one of the factors that we take into account to come up with the ranking. It's essentially just, it's all data driven. As far as how they correlated with the market values, for the most part, there was a trend. So any sort of drop in the rankings really was a good indicator of, maybe significant distress in the market values. And then on the other end, when you saw the freighter rankings coming back up, you saw that also expressed with the freighter values coming above base in many cases. There were exceptions to that, for obviously like the CRJ900 was one of them. Even with some of like the A321neo, the ranking still came up, and our market value for that aircraft did take a hit in 2020. But we still, the ranking has increased, and with that, we've also seen the market value starting to come back closer to base for that aircraft. So, the rankings are sort of the unbiased viewpoint from an appraiser, since so much of our own opinions go into the values as well as just the trade data as well. So it has been a good indicator for us to kind of benchmark some of these value changes we're seeing and market sentiments surrounding the aircraft.
And how would you, as an investor or a lender, use that score in an investment decision?
Yeah, so it is actually pretty popular with investors and financiers, the rankings that we have on there, and that gives a good idea as far as market acceptance of the aircraft. It doesn't give you the complete look at any sort of residual value risks, because I mentioned like the 777-300ER, we had that in 2015 was one of the highest ranked aircraft we had. because at the time, the market was very accepting of the aircraft. With the mainline carriers and the legacy carriers, it was performing really well. But the residual value risk, it doesn't take into account the full residual value risk.
Yeah, okay. One thing that, I mean, this is a question for both of you. Hasn't there been a real challenge to come up with valuations in a market where there have been almost no naked aircraft sales whatsoever? I mean, has any A380 been traded since the pandemic broke out?
And well, not as a going concern, Niels. In fact, I don't think any A380s have been traded as a going concern. You know, we've seen the Air France aircraft being progressively condemned to part out on a consignment basis. I think appraisers had to use comparables, really, when it comes to a lack of data in the marketplace. And comparables and looking at sort of how, in general, values have dropped and lease rates have dropped, and then essentially modify that to each aircraft type. It has been essentially, it has been very difficult because of a lack of data, real data trading plots over the last 18 months, for sure. And then there's also the issue of, you know, the values that they're trading at. Can you classify that in today's market as a distress value, or is it a true current market value? One could argue that the distress levels are now sort of, or the current market values are closer to where distress level pricing may have been. So
yeah, aren't they unfair market values because the market is unfair, right, to sellers? That's how it goes. Yeah.
But no, Lindsey, do you have anything else to add?
No, I mean, I think that's very true. You do have to use comparables in some cases. Also looking at on the lower end, you can look at some of the part out values to get an idea for where kind of the bottom end is. But we actually have seen some of the trades have been picking up in 2021, not for the trade, but where there was a significant lack of data and trading points in sort of the beginning of the pandemic and in early 2020, that since changed. And so the marketplace has become much more open in the data availability.
Jan, I think we have another question from the audience.
Yeah, so I think that question is for Lindsey. So on your last slide, you have the aircraft split into like four quads. Like, would you mind to address why the E190, I think it was put into the bottom left the chart?
Yeah, so I mean, the E190 is one of the aircraft where it was, the values had taken a pretty significant hit before the pandemic, just due to the number of airlines that were moving out of the fleet, either for the A220 or the E2. And the fact that those values had been depressed for so long and are of course continuing to stay depressed. They haven't fallen any further that we've seen from before the pandemic, so at least there was stability during the pandemic. But the opportunity for those values to return back to base in the time that it will take, from our perspective, does put that aircraft at a higher residual value risk. So it's not to say that the base value is going to come back to where the market values are today, because I do think that it's still a little bit more depressed than the true base value of the aircraft. But the likelihood of it returning back up to that full base value we had before, for us, is starting really to diminish.
Okay, and then this wasn't the question, it was more of a comment from Nicholas Dragunov. He was commenting on your slide, Oliver, where you were showing the deliveries of Airbus aircraft versus Boeing aircraft. And he was just making the point that, you know, some of this has to do with production issues and grounding issues. So he felt it wasn't an apples to apples comparison.
Well, no, but it's reality. And it affects how the marketplace thereafter operates with the surplus of aircraft in each category.
Yeah.
So yes, it is not apple to apples, but unfortunately it's happened and we have to deal with the consequences in the marketplace.
Yeah, it's all fruit anyway. All right, guys, thank you so much, Lindsey, and thank you so much, Oliver, for that. It was quite interesting. Thank you, Jen, for helping out with the questions. And then see you back on Thursday at 10 o'clock New York time, 1500 hours Dublin time, with ISTAT's president, Dean Gerber, who's going to talk about how 2021 wrapped up and what is in store for ISTAT for 2022. So see you back then. Thank you.
Thank you.
Thank you.